have nothing to risk. Sign up today.
The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. It doesn't matter whether you're in Poughkeepsie or Washington, D.C., even though that does not rhyme. We always love to have you come to the show at this time. Almost brought it back there.
Between 2 p.m. and 3 p.m.
So what do we have going on? Well, we're up 16 points, with about 0.5%. Energy's okay. We're doing a little over 9 billion shares, but it just acts pretty much like what options expiration weeks act like, which is just a slight bullish bias. Is there a lot more here? I have probably one of the worst opinions of the market, and that is because no one else does. Surprises always come kind of out of the blue. A lot of people thinking that there's going to be a huge market day tomorrow. They're talking it up that way, based on comments of incredible spending, never-ending spending by the government, by a new, what is this, office of his president-elect, the non-existent office of the president-elect. Equity put call ratios back to the lows of December 1999. What can you make about that? Under 25%, basically one. Generally, if you talk about an individual stock, you'll have everybody buying puts or calls. But overall in a market, to see a day where you can't get a fourth of the people to buy puts is pretty much shocking. We've been talking a little bit about the bond vigilantes. TLT kind of hit 150 yesterday. Looked like it was going to take a little bit of a pop. I still suspect that you're going to see 148 before it finds even a possible bottom. But up $1.50 today. Probably going to play around in this area. It tends to go sideways for a long time, like 4 or 5 days, and then heads back down. So I imagine we're probably setting up some kind of trading range between maybe where we're at here, like 150, 250 to 150. I suspect that's going to break like the market did from 158 down to 150. Starting with a big gap lower. Still looking for one big gap lower in the TLT before we find any kind of temporary thing. But continue to watch the bonds is probably the best indicator and the best explanation of what's going on in the market. With all the talk of a fire hose of spending, of never-ending spending, getting ready to come out on the catwalk, you got to think that gold would be up $100 today, and it's not. So the question is, why isn't it? Why is it only up about 11 or 12 bucks? Why hasn't been able to go through 2,000? If you read the headlines, everything says it should. So there's probably something that we are missing. The best explanation I have is the bond vigilantes that are going to sell bonds into a new high spending. If you thought that adding $1 trillion in a year to the debt was something, my guess is that we're looking at that infinitum, not just a 1 year pop. And to me, the instant thing would be gold would be 2,400 in 3 months. So why isn't it running right now? I've heard a lot of people say that everybody's over in Bitcoin and that's all about it. If that was true, I suspect that we should have seen at least a $50 or $100 pop in gold when Bitcoin crashed over the weekend. We didn't get that. So maybe I'm wrong on everything, and I have been before. But the best explanation I have is people are going to start selling bonds. And if you go back to the 90s, they're very similar kind of setup with a new president coming in 1992. The bond vigilantes got on their high horse and pretty much kept spending down by pushing on rates. And maybe there's some other good explanation. You can give me a call at 877-927-6648 if you have one that you think is better. Kind of touching on the big things. I am deathly afraid of a market when you can't get anybody to buy puts, when margin is at all-time highs, whether or not you're talking about absolute dollars or percentage-wise to the total value of the market. Any kind of thing that you look at, I'm going to say it's 20, 25% higher than it was going into the dot-com bubble of December 1999. So just absolutely monstrous signals that say one thing, and that is a little bit higher every day, or one day a whole lot lower. And that's generally how you get them, as many people say, the market likes to bring in the most amount of money at the top, and why I am internally nervous. Of course, there's different kinds of highs in the market. This is just one, and that is rampant euphoria. There is also another kind, of course, the one in, was it March of 2008? I think it was March of 2008, where every bank in the, every bank in the S&P tested its previous high of a few months earlier with 50% volume, and then gave huge sell signals the next day. I think it was May. Was it May? Let's say May 5th. That day kind of reminds me of 2008, but I'll have to go back and look at it in the chart. So you got lots of stocks, and we've got people in the den pointing them out that are running, they are what they are. They're not stocks with solid financial long-term interests. They are the ones being run by, I don't know, is it the Robin Hooders? Who's behind these that are moving them? But certainly you have the rolling gangs. I was talking to one of the dinners earlier in the chat room, and just reminds me so much more of when I was starting. Right after, there was a guy named Tokyo Joe, and he had a chat room, and he'd run these stocks, and he was extremely good at them. There's a couple other big chat rooms these days that do the same thing, and you can get these things to move a lot. Eventually, I think Tokyo Joe went to jail. He was basically front running all the stocks. There'll be other things like in these giant chat rooms, stocks, but no different than 1999. Tell the music stops.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Then it's all just a little bit of history repeating.
On this day in, it's not 1904, it should be 1929. I got it wrong, or I forgot to put it in there. Well, normally I never make mistakes. Never. On this day in 1929, nearly 50 years after the famous gunfight at the OK Corral, Wyatt Earp dies quietly in Los Angeles at the age of 80. Earp brothers had long been competing with the Clanton McClary ranching families for political and economic control of Tombstone, Arizona, and the surrounding region. On October 26, 1881, the simmering tensions finally boiled over into violence, and Wyatt, his brothers Virgil and Morgan, and his close friend Doc Holliday killed 3 men from the Clanton and McClory clans in a 30-second shootout on a Tombstone street near the OK Corral. Subsequent hearing found that the Earps and the Hollidays had been acting in their capacity as law officers and deputies, and they were acquitted of any wrongdoing. But, of course, they killed his brother, so he hunted them down like dogs, eventually absconded to California, and went up to Alaska for a while, made some fairly decent money in both of the gold rushes of California and of Alaska, and ended up being a big deal. But not during when he was alive, about 10, 15 years later. I forget exactly when it was. Maybe it was 5 years later. Gentleman wrote a book about it. Before then, no one had ever heard a peep about Doc Holliday and all the rest of these guys. He made his living from about 1910 to 1919, 1920, being a technical consultant on movies for Tom Mix. In fact, on his death, Tom Mix went to his funeral and cried. So if you don't know who Tom Mix is, you need to start reading a little bit more about history. So what else do we do? That's about it on that. We'll go to some other things right now, and We'll be talking up some other stuff. We got some emails here, so let's go to them first. And what do we have? I wanted to bring this up, and we'll go to the emails because generally, if you're in this market long enough, you'll understand what you want to do. And I can't. A lot of people talk about connecting the dots. You can connect them backwards. What I probably should have thought of in the last couple of days is that you would have seen ammo stocks and gun stocks take off like rockets. During the Obama administration, he was they didn't need to advertise. He actually ran the arms stocks up on a daily basis by talking about getting rid of them. We got kind of a similar thing on Friday, but it wasn't out in the open, I think, until Monday. And that's where I think the news actually broke over the weekend. But he was at a private fundraiser. Biden was at and talking Second Amendment issues, and no different than Obama. Probably going to be a fairly long and prosperous year for the gun manufacturers and ammo manufacturers. What I'm hoping somebody that's really into guns can call and tell me why this company is popped so much, because they make these tracer rounds where you can see where you shot. Now, maybe this is like a fad. Maybe someone can tell me that this is really something that's going to run for a long time, or just because they make ammunition and it's short and hard to find, that this thing is going to continue to go. But 2 big days, probably going to get a third in POWW. Okay, what else do we have? We got a question about DDD. It says, Hector says, great call on that fraud Bob Swan since he took over. If you missed it, we'll get to Intel. In fact, why don't we just do that right now? INTC. I've been talking about, generally, it doesn't make a dime's worth of a difference who is the CEO of the company. If the mission's right and they're half or a quarter competent, that the company's probably not going to do that much difference. There's a rare occasion where someone is extremely good, or someone doesn't know their exhaust port from a hole in the ground, human exhaust port. So Intel gets right back up to 60. I said I wouldn't want to be short this thing. It got down to $43. You just never knew when they were going to can the CEO. And if you don't remember the history on this, this guy named Bob Swan was a political infighter. So he went back 10 years to find somebody that the current CEO had been having a relationship with, and dragged it out 10 years later to make sure that Intel was as woke as you could be, and got probably the smartest man ever at Intel. Guy held like 3 PhDs, knew everything, hadn't done anything wrong really, but because a kind of a retroactive view of policy of who you can date got him pushed out. And as I said then, when you get people that aren't really good CEOs, that are political infighters or bean counters, I have yet to see the stock ever do anything over time. I always lament that the day that Bill Gates left and he was replaced by the CFO at the time. And, you just see this guy out on stage dancing around and kind of acting weird. You kind of knew that this guy was, he was weird. He's got a lot of cash, so he can buy a basketball team. But I never believed that he was going to do anything. Anyway, Microsoft went sideways for almost 12 years. As soon as he's gone, the thing takes off like a striped, I can't say that on the air, can I? Took off like a striped rear-ended beetle. So anyway, nice day. This is why you don't want to be short these things. It's going to be problematic in the long term. Intel did one thing, and that was forced by the same guy that became the CEO, the Bob Swan guy that was the CFO at the time. And that is that he kept pushing everybody in the leadership at Intel not to spend money to upgrade its own ability to build chips. Now they've lost that entire part. But Intel's saying once again that it's going to go to Taiwan Semiconductor or Samsung to have its chips built. So that's, if you're a small chip manufacturer, there's no way you can afford it. You've got to get somebody else to build it. But if you're a large chip manufacturer or user, what do you do when those guys cut you off? Microsoft, again, talking about building their own chips, and Apple also. In fact, Intel took a big beating the day we were on the air with Tom O'Brien talking about Microsoft designing its own software and other stuff for almost 10 years. Eventually that stuff comes out. Oh, there we go.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, we're talking about DDD and others. What else we have? Oh, I don't think I got into this. Okay. Bob Swan, sold at 27 area. I still like the company, would like to buy. Pullback, where's the entry point for a run to the 31 area again? I don't think you're going to get it. This is a once-in-a-lifetime move for a stock like this. it's probably going to take 6 months for this to sort out, maybe 3 months. But my guess is it's going to consolidate for a very long time. The reason is that this had 10 days, more than 10 days to cover. And I think maybe you were the same one someone else asked, how long can these things stay up? When you have 10, 15 days to cover, these things generally aren't a one-day thing. You may not get 31.45 again. I thought maybe that first day would have been it. It's just a little higher than that percentage-wise. But you still had 30% shorts yesterday in DDD. When they give up on shorting it, the last 3 days have been over 30%. The day before, Monday, 38% on it. It doesn't matter. These guys, people that short stuff like this, that hate stocks, really don't think a lot. They just think it's up, so you should short it. Generally, what you want to see is people push a stock higher and nobody short. That's when these things whip right back down to the bottom. So as I'm saying, I don't think that there's a lot more in this. I think it could go sideways until the shorts cover. And then you're going to see this probably come back, I'm going to say maybe to $17. And that's where I would want to get into it, somewhere about halfway into that first big candle with all the volume. The problem is trying to buy it up and just assuming that the market's going to continually wind higher generally makes you wake up with a big loser one day. So I'm not a big fan of chasing everything up here. Like I said, just because, let me put it this way. A lot of people make a lot of money chasing stocks. We see them in the den, especially lately. And that works for a while. But I've seen the other side of that hill, and you're great if you get out of it or can flip on a dime. Most people cannot, though. Kind of like don't try this at kids' at home. Very few traders have mastered the ability to turn on a dime. Some people can do it. Most cannot. So I don't try to encourage others because I know most will not be successful long term. There are the few that do it well. DDD. Anyway, I'm thinking, man, if you could get $17, $18 back there on light volume, what you want to also see, and you can check with me, is just how much shorting there is on the day. As you can see back here, even though it had a huge short position, the intraday short positions were in the 10 to 15%. And the last 3 days, 3.2%, 3.8%, 3.2% yesterday. So it's probably not pulling back real quick as long as everybody continues to short it, but it's probably not going much higher. And what you want it to do is pull back, gain a ton of shorts, and then the same thing will probably happen all over. You may get that 31.45 yet again today. Okay. DM. For some reason, I'm not getting that. Is it like an ADR or an over-the-counter stock or something like that? I'm not exactly sure why I don't get DM. Dominion Energy Midstream Partners. Is it some kind of over-the-counter thing? I wouldn't, not a big fan of those either. Generally a stacked deck. No, not over the counter. Desktop metal. Okay. Is the symbol something other than DM? Because I'm not getting it from 3 different feeds. So it always makes me nervous when that happens. Okay. We'll go on here. We got other questions. Okay. We got to the end that. Okay. Another good question. Please expound on the possibilities that bonds are being sold. What ETFs and what strategies should we employ to profit from it? Some of us not so sophisticated to understand all the implications of the move in the market. Well, I'm not a big bond trader, but I have seen the effect of bonds in the market. And the fabled plunge protection team is probably only equaled with the cabal of probably some internet chat room about bond vigilantes all getting together, selling bonds, and by doing so, make sure that the government has to pay up, or if they borrow a lot of money, the interest rates for housing and everything else crash the market, basically checkmating government big spending. And that's what we had pretty much from that 94 to about 98 when they kind of gave up. And that's when everything really took off in the market. I'm going to say probably that long-term capital management debacle in September, October of 98, where eventually the Treasury Secretary and the head of the Fed had to walk into the middle of the trading of the New York Stock Exchange and saying, hey, huge money there. I think maybe the Dow was down 500 points, went 500 points positive within a couple hours. I think it was in the afternoon. Again, this is a long time ago. My memory may be somewhat faulty. But Rubin and Greenspan went out and started doing a little tap dance. Huge turnaround in that day. And for the most part, I would say that the amount of money they threw at the market pretty much drove the market into that huge pop into December of 1999. They probably should have started pulling some money out as the market got hotter. I'm going to say probably in retrospect, they're going to think the same thing now, since we're all-time PE highs going into earnings on this Friday. But basically what happens is that you want to look at companies two ways. One, those that don't need any cash, and those that do. If your company needs cash, it's going to be problematic, and it's going to cost them a lot of money if they can get it. So one of the general themes of that is two things. Either IPOs that gain a lot of inside money, and they don't have to go to banks to actually borrow money. So the kind of hot idea stocks. But if you're talking about building the next big mine somewhere for an iron mine with a massive amount of infrastructure costs up front, those are the kind of things that just don't go anywhere, which makes the ones that are existing there virtual monopolies. So a lot of times you see a lot of things move like now, like the materials markets, copper, steel, all that kind of stuff. Part of that is if anybody wants to come in, how they're going to do that is interest rates move higher, that kind of huge infrastructure. It doesn't happen, making them virtual monopolies. We'll be back in a minute.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We had someone in the den ask about what the put-call ratio is. Now, there's different put-call ratios. There's one on the out-of-the-money puts and calls, which is about even as 50%. But we're talking about people that are buying all options. Of course, there's a huge difference in the amount. In the stocks of the S&P 500, yesterday, 450,000 puts and calls were bought. Now, those are not in the money options. That's compared to 2.9 million total puts and calls. So if a smaller part of the market, but that is all the ones on the equities, right? Not the ones on the ETFs. So if you just look at the total equities, that's down to 25%. That is literally back to the end of December of 1999. I've got data. I've kept data myself for the last 8 years. And I don't have it before that. You had to buy it. I've seen some charts. And that's where you have to actually go back to find that December of 1999. But this thing's been trending that way for a long time. We showed the chart from my newsletter yesterday in here. We'll go back to it. I don't want to zoom. I want to go up and down. Okay. Which is this one. The red line is the put-call ratio, which is about half and half. This is the long-term move of equity puts. Now, you had one spike. And again, that spike came up to about 40% the last week of October. And guess what? That was the low in the market. We've been going up ever since then. And, of course, people have been buying less and less. Every time you kind of think that the market's going to kind of lose its cookies, you get a few people buying puts, which is a pretty good indication that people are shorting the equities, too. And you get in there. But, when you can only get a fourth of the people on one side, be extremely afraid. Now, generally what I want to do on this kind of market is only be in options, because if you do get a big move, it will probably be slightly higher or a whole lot lower. And you just, you don't want to end up with a big loss on something. Options, you can predefine your loss if everything goes away and against you. And right now, with only 25% people buying puts, it's a much cheaper and certainly less riskier trade than actually trying to go short the equity itself. And you know what? You can always go long the equity and put a hedge in with a way out of the money put that's fairly cheap. And, of course, with the way that this market's set up, that's exactly what you want, because guess what? If the market does go lower, it's going to go amazingly lower and amazingly quickly lower. You get markets that kind of have a lot of hang time at the highs and then slowly roll over. That's generally a condition you have where the market's more balanced, but still it can't go any higher. This market is unbalanced. It's unhinged. Anyway, just a few thoughts. I don't know. I was looking at it. Like I said, I was looking at a chart, and it was just, I saw the low tick somewhere in, someone has asked me the actual date. I just saw a chart with the low tick in there somewhere in December. I've got the data myself for 8 years that I keep every day, but that's it. Was going to talk also more about my newsletter today. We talked a little bit about it yesterday. We were talking about the summation indexes. Then I was going to get into the short-term oscillators. I like the summation index, the McClellan summation index. It's great if you're a very long-term investor. If you're more of a swing trader, it moves too slowly. I develop my own charts that are based on the sectors in the S&P, not those. And generally what you want to do on this thing is anytime you see a giant washout, you go back and look within a couple of 3 to 5 days when these things hit absolute lows. They're going to hit that low, and you're going to see the market bounce somewhat or a whole lot. And this is the strategy we've been using for the last 2.5, almost 3 years since I developed it. Want to give thanks to Basil Chapman for giving me a hand and being kind of the devil's advocate when we were working this. But generally, if I can get everything down, and we'll show what I'm talking about here, stocks mostly, when they're going up, will bounce around between the bottom of this band and the top of this band I have, which is on the NASDAQ 100. There's 100 stocks in it. So we're basically looking at all 100 stocks. In machine learning, which is kind of the approach for these charts, it's what they call ensemble learning. That is using a lot of different techniques, or the wisdom of a crowd techniques, which is using a lot of stuff. And generally that works much better. So a lot of times you look at a 9-day moving average, you go, okay. So what does it mean? Well, it doesn't mean 1/4 of what or a tenth of what all stocks under a 9-day moving average or all stocks above a 9-day moving average. Generally, what you're looking at is euphoric markets that can last a while. When they go, you're still going to get some retracements. But generally what that tells you is you're going to probably have 60 to 90 days where the market's going to do nothing but go higher in that sector. So there's the NASDAQ. We'll just go through all of them. I've got a couple of minutes left. The 1Q is another version of the NASDAQ composite with a lot more stocks in it. Here's the Dow Jones. This one hasn't been as strong as the others. And the others haven't been very strong at all. But the Dow, up some today, but right against resistance. That's why I'm pretty much thinking that there isn't a whole lot higher for between now and the close on Friday. The IYT, it's getting back up to the level where it's going to find some resistance today. And again, your spike lows back on the last week of November, and kind of in the to a lesser extent. Here's one I wanted to talk about, and that is you want to see all three of these lines kind of all get down way into that oversold level, and then you're going to have the pop higher. This one went sideways for a while because you never really got all three of them to come down together. You did back here on the 21st, and that's when you start seeing these things go a lot higher. Energy sector, same thing. This one is all peaked out. It was peaked out for a long time back in November. You had a little bit of a sell-off. You're right back into that again now, which is wild euphoria. Look for big gaps higher and big gaps lower in that kind of thing. But again, most of these things are at the top of that extra band. In the Russell, we're kind of there, which means that you've got probably 90% of the move already in. You're basically you should be starting to look, unless you think a lot more is there, for exiting a long position. Semiconductor, it's hit highs, extreme highs, and I think there's enough kind of overhanging the semiconductor space, we may be in a fairly long-term high in it very shortly. We'll be back in
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, BAM! As well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
BAM!
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. I was just going to show you some of the other ones, but almost all the market right now is kind of at this top upper band, which means that there's no quite signal to say that the market's going to go right back down to the previous lows, but you're at fairly stiff resistance. You're probably going to need something, and that probably would be earnings to drive these things any higher. Some of these have kind of started to top out short term. The XLF is very interesting to me here in that everybody's betting on huge profits in this, and they have earnings. And whether or not they confirm those earnings on Friday morning with the earnings call is going to be very definitive in the next couple of months of that XLF. Broker dealers, they've gapped a bit higher, but they're kind of stuck out here. Certainly not a lot of volume in those broker dealers. They look like that may be a problem, especially they don't tend to make a lot of money after a market crest, a long-term market crest. REITs, this one is very interesting to me, the VNQ. It has this thing that Bob Carver Guy used to have a site. I talk about him every once in a while. He calls it a contact lens formation or a dome top out here. And he said these are the most dangerous ones out here because then you get just the opposite side of that. With we're probably going to go sideways for a couple of days on this unless the TLT gets back down below 150. But as soon as it starts moving back down again, watch very close to this REIT B&Q. When this cracks, all the last times in the last 4 years that the market's gone down significantly, this sector has been the one that cracked first and cracked wide open. If you do get a little bond vigilantism, that housing market is generally the first one to suffer too. So you want to probably, I don't see a lot of reason to be in the housing market right now. To tell you, it's had a nice and big. We'll be back tomorrow, same bat channel, same bat time.